keeping us on. Thank you. Members of the commission, it's 9 o'clock, and I will turn it over to Director Apollo to get us started.
Thank you, Mr. Chairman. Without further ado, I'd like to do a roll call for quorum.
Please proceed.
Thank you. Commissioner Meyer?
Here.
Commissioner Racines?
Here.
Commissioner Pope?
Here.
Commissioner Wallace?
Here.
Commissioner Naves?
Here.
Commissioner Revel?
Here.
And Chairman Gordon.
I am here. We have a full quorum. That is exciting news.
Yes, we do. Thank you, Mr. Chairman. So I'll do my quick announcements first. Agendas and sign-in sheets are in the back of the room, so if you are here in person, please do fill those out. And my monthly disclaimer, key decisions pertaining to the Wyoming Stable Token Initiative will be made by the commissioners of the Stable Token Commission or the state legislature in public meetings such as this. At this time, no blockchain has been selected for deployment of Wyoming Stable Tokens, and no Wyoming Stable Tokens have been issued. Further, the only commissioners are those appointed by statute, the governor, or a majority vote of the commission. Information outside of these public meetings should only be considered factual and legitimate if it is distributed through our official channels. At this time, these are limited to our website at stabletoken.wyo.gov, the Wyoming Legislature website at wyoleg.gov, and our social media channels with the @WyoStable username on Twitter, YouTube, GitHub, and Warpcast. Mr. Chairman, with your permission, I'd like to go through the agenda for today, and then we can take it from there.
Please proceed.
Thank you, Mr. Chairman. So today we'll do our standard updates and approvals, including the meeting minutes from our prior discussion on February 27th. We will go through the monthly budget review for the month ending February 28th. I'll provide a brief verbal update on where we are with vendor negotiations and contracting. And I'll also walk through a brief memo on the legislative session. Not much going on there specific to the Stable Token Commission, but there are a couple of acknowledgements for what might happen in the preceding years that may be worth discussing. We'll do a stable token industry update. Again, we'll have a bit more of a domestic focus, being that a lot is happening in the world of stable coins at the federal level. We will go through a updated version of the reserves management rule set, and then discuss the blockchain qualification refresh that we've talked about for the last two sessions and bring that forward to fruition. We'll also have potentially a discussion around the token name and IP protections, and then get into next steps and what comes next for us at both here and at different events in the blockchain space that we've been invited to. Are there any questions on the agenda?
Questions? Director, I don't hear any.
Thank you, Mr. Chairman. I will proceed on to the meeting minutes for February 27th, our prior meeting. During this discussion, because this was our first formal monthly meeting in some time, after several special sessions, we went and approved minutes for 4 different sessions. We did all of our standard approvals, and then we highlighted a lot of the movement around where we were at that point with the vendor selection process, which was functionally, we had just wrapped up having all of our interviews done, vendors ranked, and we presented that kind of stack order ahead of negotiations, which we've been working on since. That was predominantly the thrust of the conversation. There's another kind of discussion around some of the blockchain selection exercise and how we would bring that forward. We put a memo together for the last go around and went through that. We've manifested that into where we are now, which we'll talk about in a little bit. But that are the meeting minutes, essentially the substance of them for our discussion last month. Are there any questions on that?
Members of the commission, you have had a chance to review this. I want to compliment the commission for a very busy few months. These minutes probably capture a bit of that, but if there are any corrections or additions, now is the opportunity. Otherwise, I'd entertain a motion to accept the minutes. Thank you, Commissioner Myers. Move to accept the minutes. Is there a second?
Second.
Commissioner Racines, thank you. Moved and seconded. All in favor signify by saying aye.
Aye.
Minutes pass. Back to you, Director.
Thank you, Mr. Chairman. So next up is the monthly budget review. Again, you have two longer sheets of paper in front of you. To quickly go through the summary for the month of February. As usual, the standard driver of our spend for the month is personnel. I'm happy to see that that has stabilized. So as I had mentioned in previous meetings, with the personnel expenses in the 100 series, when resources come on, it may take 2 or 3 months to stabilize both the salaries as well as the benefits. As you can see from the kind of repeated numbers in January and February, we've now hit that point, which is great because one of the things we've done is allocated funding from our 900 series, which is kind of where we have the gross sum of our funding, into the 100 series for the rest of the biennium. So that way, it's kind of a unilateral move. That way, if the funds remain there, it should cover where we, the spend for the rest of the year in that capacity. In terms of travel, as expected and discussed in our last meeting, we did have 2 charges for out-of-state travel. For the team, that was myself going to Boise, Idaho, as well as Dublin, Ireland in February. And for commissioners, that was Commissioner Naves being invited to the very stable conference in SF. And Commissioner Naves had presented some of her discussions from that attendance in our last conversation. If you go down to hardware and software, there's another $803 line item there that is predominantly driven by a $550 expense, which was for renewal of Adobe Acrobat Pro licenses, in addition to the funds we typically spend on a monthly basis for all of our repeating software as a service platforms, Twitter, Notion, OpenAI, and Zoom. Telecom charges have also stabilized. This is everyone's phones, mobile plans, and VPN devices. And you'll see that none of the professional services have hit yet. We do expect the first invoice from Paul Hastings to appear in March. And we would expect that any of the other invoices that we have as a result of engaging the third parties that we're looking to negotiate with and help us build the token out, those would hit at earliest March. We'd assume that that could be a fairly large blip if there are a number of parties that we engage simultaneously who all have upfront payment for certain things we're engaging them for. I could expect April to be a fairly expensive month for us. I just want the commission to be aware of that. But again, we are baselining all of the spend we expect for these vendors on a month-to-month basis. And once those negotiations are complete, we are happy to share that with the commissioners. Just to kind of put a fine point on it, our expenses to date for this biennium are $432,211-ish of the $5.8 million available. We've used about 7.45% of the total budget. We have a remaining budget of $5,367,789, or about 92.5% of the total budget. So we continue to keep a very close tab on that. I don't believe there is much else to say when it comes to the detail behind this summary. At this point in time, I think we've gone through it with a decent level of detail, but if there are any questions, I'm happy to entertain them now.
Questions? Okay, thank you. Please proceed.
Thank you, Mr. Chairman. So just dovetailing off what I have just said, again, in terms of vendor negotiations and contracting, that is all ongoing. As a quick, just logistical point on this, what we are doing is going into a fairly extreme level of granular detail through these negotiations. When we put the RFPs forth, we did use the template for pricing schedules that are provided by A&I. But as we go through and really try to be particular about when and how fees are going to be assessed, we are breaking those down to a very high level of granularity where we're going month to month, trying to assess what is a one-time charge, an annual renewal, a monthly charge, hourly coverage, project all that out, and make sure that what we are engaging one vendor for is well in line with what we may be engaging another vendor for. So for example, and again, this was part of the disclosures we had last month, for the token distribution and the infrastructure behind it, that will be a consortium between Layer 0 and Fireblocks, with the top ranking candidates that we found. So going back and forth between both teams and making sure everyone is aligned on what they would be responsible for, and we're not spending money for potential tasks that would overlap. So that is where we are with that process. Again, we're doing, I think, a pretty good job of making sure everything stays well within our budget, as Commissioner Wallace asked last time, even with the gross amount of proposals that were put forth. They were all, adding them all up at cost would still put us within our budget, but we are still looking to negotiate some of those down, some of them somewhat precipitously, to make sure that we've got enough bandwidth for whatever comes our way, and we have some flexibility in that capacity. So I'm happy to take any questions on the negotiations. And don't have anything prepared because they are still live and ongoing, but to the extent that there are any questions, I'm happy to answer.
Questions? I think you can proceed.
Thank you, Mr. Chairman. So the next item on here is a quick update, is a memo around the legislative session. So to be quite clear, when I presented this document at the end of the session last year, it was quite robust because we were tracking not only amendments on the Stable Token Act, but also the budget that we were looking for. This year, our agency was not necessarily attached to any legislation, nor were we pursuing a supplemental budget. So we were much more off the radar, with one exception, which I'll get to in a moment. And I also wanted to share some of the bills that we just tracked because they were potentially tangentially related to our operations. We don't need to go through all of these, but I will point out a few that I think might be, my own personal opinion here, might be resuscitated within the next legislative year. I think one of them might be data privacy. One of the things we need to be very sensitive about is the data that we are collecting. So we certainly tagged this one. It did fail. The House did not consider it for a committee of the whole vote. But at the same time, we do recognize that we're going to need to be collecting some data about users. Obviously, we want to respect privacy, but we also need to balance that against making sure that Wyoming stable tokens are not used for nefarious action. So in that capacity, we'll keep a close eye on things wherever personal data crosses the threshold of being on government servers. We need to be aware of that and track that. Another one that I wanted to point out quickly was the Select Committee on Blockchain and Emerging Technologies. This was, on one hand, a fairly simple name change of the Select Committee, but also in some elements would expand the remit somewhat broadly of the Select Committee, talking about different commercial activity that it should pursue through digital assets to help bolster revenue streams in the state. So I would perhaps expect that one to come back around. And then one of the bills that did pass was the central bank digital currency prohibition. This was something we kept a keen eye on because we wanted to make sure in no way, shape, or form was the definition of a CBDC put forth by the legislature overlapping in any capacity with the stable token we're looking to build. And I was happy to see that there was a very specific definition about a federally issued stable token as a CBDC and well off of our radar. And that one did pass and was signed by Governor Gordon. And the final one here was the Cryptographic Frontiers Act. There was quite a bit to this in terms of being an act that would almost, in some versions of it, compel the state to defend cryptocurrency-related organizations if they were being sued by the federal government. I'm not going to comment on that element of it, but what I will say is there were portions of this bill specifically where they did a pretty good job of defining terms that are not defined elsewhere in statute. So what is a private key? What is a token? And again, I would expect some of that vernacular to come back into play, perhaps over the next year, perhaps downstream of the fact that the Trump administration and the President's Council and Working Group on Digital Assets is looking, per their own admission, to do a market structure bill, perhaps following the stablecoin bill. And again, I would expect that we would want to be somewhat in conformance with federal legislation if we're not the first ones to the table. So that's the kind of the bills we were tracking. The last thing I'll mention here in terms of the supplemental budget bill, we did get pulled into this quite briefly. On February 6th, Senator Ide introduced Amendment S-3012. It was a third reading amendment to functionally defund the Stable Token Commission by reverting any unobligated, unexpected monies of the commission's possession back to the general fund. However, that amendment was withdrawn on the floor the next day. So that is the wrap up for the legislative session. Are there any questions on that?
Any questions?
Yeah.
Mr. Treasurer.
Mr. Chairman, just wondering that Is it some of the same actors running all of these, or is it just a diverse group of folks?
Through the chair, Commissioner Meyer, if you're talking about the, the funding, the defunding, Senator I did put an amendment like that forward last year, did not pass. But in terms of the tracked bills, it's a bit of an interesting setup where some of these came through the Select Committee on Blockchain versus some of them being individually sponsored by members of the Select Committee on Blockchain. But then there's also others, I think, I don't have it in front of me at this moment, but I do think Representative Baer was a sponsor or co-sponsor on some of these, perhaps the central bank digital currency prohibitions. I don't want to speak too far out because I don't have it in front of me this very second, but it was, I would say, downstream of the Select Committee and some of the attention we get through the JAC as well.
Mr. Chairman? Please, Commissioner Pope.
Thank you. I do know that the Cryptographic Frontiers Act was Representative Singh, and he is now the co-chairman of the Select Committee going for the interim session. And I thought that was a very interesting bill myself, and I think we will probably take a look at it again in the Select Committee.
Members of the commission, it strikes me there's a fairly new Select Committee. And I know, Commissioner Pope, you're our liaison. It might make sense at some point to have a conversation with that committee. Leave it to you, I guess, if you think there's an appropriate time.
Mr. Chairman, I would absolutely agree. I think that that an appearance of some sort jointly with that committee would be a great thing to do, because I think that we have common interests at play.
And I'm also given to believe that a few of them are very new to the topic, so having an open conversation might be valuable.
Yes, and I'm honestly, I've been involved since 2017 in one form or another with this, and this is one of the more exciting times that I guess, and exciting interims that I've been involved with. I'm greatly looking forward. The first meeting is in May, and I think that if the interim topics list gets resolved the way that I hope it will, this is going to be an exciting time to be on the committee.
Very good. Further comments, conversation?
Mr.
Mr.
Chairman,
Treasurer.
I think a lot of these committees are all new. It wouldn't hurt to maybe get a report and send it to the Revenue Committee, because they probably haven't, a lot of them probably don't have a clue that this could be a revenue generating mechanism. You know, yeah, I'm not sure how we're gonna work some of the educational processes, but that we want to do in our office, but yeah, it's going to be, I think, a summer of trying to get people that don't know, trying to educate them in a lot of different things.
Yeah, very good.
Mr. Chairman, if I could have one more word on that, just as a follow-up to some of the comments that have been made. You know, our office is always happy to help and provide whatever is needed to get the word out about what it is that we're building. Obviously, we're putting a lot of effort in, but perhaps we need to make things just a little louder, and we're happy to accommodate that. A couple of things on the back of Commissioner Meyer's point in regards to the Revenue Committee. I do believe they are I am expected to provide a report to both the Minerals Committee and the Revenue Committee ahead of actually launching the first version of the fully reserved token. So we can still do test tokens and play around with things. That was one of the amendments that was made to the Stable Token Act last year, that we could do test tokens and the report would be due before the formal live version of it. But I would be happy to get in front of those committees proactively. Just let them know, here's who we are, here's what we're doing. Commissioner Meyer, you've seen the models, Commissioner Wall's seen the models that our CFO, Joseph Saldana, has put together. They're extremely robust in terms of the simulations that are in there, poking around with things like interest rate sensitivity. So, I'd be more than happy to share those with whoever needs access to them to give them an idea of the level of granularity we're going into, level of detail we're incorporating, and the largesse of what it is we're trying to do here.
Very good.
Mr. Chairman,
Commissioner Racines.
and showing my ignorance for all to see as usual, Senate File 65, which I think existed this year and in a similar form last year, that was the data privacy of government entities. Just talk me through maybe how that affects this commission, or maybe the push behind that. And the reason I ask is I think I understand the intent of the bill and don't disagree with it. But in my day job, that would have been somewhat of an administrative nightmare, to maybe put it lightly, doable, but so and just very briefly, but do we expect that to come back? Is that a priority or not? I mean, it didn't make it over the finish line, so I guess it wasn't, the number one priority, but if you could just maybe give a little more color on that.
Absolutely. Through the chair, Commissioner Racines. So generally speaking, what this act does is it defines what personal data is and documents how it can or can't be used by government entities. Some of them, from my perspective, should be fairly obvious, like the government should not be able to sell personal data. That should be a straightforward one. However, when it comes to just data collection, what I think I'm speaking probably a little out of turn here, but what I could imagine one of the holdups to this bill would be is that every agency has a different reason, a different method for collecting data. So for us, if we want data on an end user, if we're going to be providing Wyoming stable tokens directly to a wallet address, we want to make sure that wallet is not on the OFAC SDN list, for example. So, on one hand, we want to make sure we respect privacy of people's ability to transact the stable token. On the other hand, we need to collect enough data to make sure we're not working with illicit actors. And, I don't think this, recalling this, again, having just the summary in front of me, I don't believe much of it was necessarily tailored to our particular line of business. We talk about digital wallets and all of that, but, I could see this morphing in any number of ways and perhaps being one of those things if the target's too wide, it's going to sweep up a lot of business lines that potentially it doesn't anticipate. And that's why I was keeping an eye on it along the way.
Yeah, and Commissioner, it is interesting. I don't think the legislature has quite refined their approach to data privacy. And I'll give you an example that was quite clear in the Ag Committee. They first considered no RFID tags, no ID tags for identification of animals. And the next bill after that, which they also passed, was that all products had to be country of origin labeled. So it's a little bit challenging if you don't have an ID to know if country of origin labeling can be actually verified. So that's, I think, an area that the legislature is going to have to spend a little bit more thought and a little less emotion on. Anything else?
Sorry, Mr. Chairman, I do have one more thing, just in response to Commissioner Meyer. You mentioned training. Just want to be specific on that. We are, as we go through the negotiations, working with a number of vendors that do have training modules. So we're talking what it would look like to provide, broad training to the state about what is blockchain and what it is we're working on, down to the more granular level of wallet management. So more to come on that, but I wanted to close that loop before I moved on. Apologies for missing it the first time.
No worries. Any further? Okay.
Moving on, Mr. Chairman. Stable token industry update. Again, we'll keep it tight and probably domestic for this one. Generally speaking, we are at a all-time high market supply of stable tokens, about $225 billion, up 50%, pretty much on the money from this day last year. We were at 150 billion. Part of that may be driven by upcoming clarity at the federal level around stable tokens. We do have parallel paths in Congress. In the House, there is the STABLE Act, the Stablecoin Transparency and Accountability for a Better Ledger Economy Act. There was a new version of that pushed forward on March 7th. And then the GENIUS Act, which is the Guiding and Establishing National Innovation for U.S. Stablecoins in the Senate. And a new version of that was released on March 10th. As of last Thursday, the GENIUS Act was passed out of committee in the Senate. Couple things to note on that one specifically. One, we reviewed that one, and we're obviously assessing whether these things would impact us. On the side of the GENIUS Act, there was a kind of broad definition of a person as an issuer of a stable token, and one of the ways it was defined as an other entity. And an other entity can be a great many things. I was happy to see in this more recent version that that's been refined to other business entity. So I think that'll put us further outside of the scope. Interestingly, the new revision of the GENIUS Act does exclude any kind of context around interest-bearing or yield-bearing stablecoins. There's a tighter band on reserves management, down from 7 days for repos to overnight. And the couple of things just on going back to Commissioner Racine's question about data that might be collected, under the new version of the GENIUS Act, issuers are treated as financial institutions would be under the Bank Secrecy Act. So that's a whole AML and sanctions regime. And in terms of a technical functionality, the GENIUS Act would require stablecoins to have freeze, seize, burn, and block capabilities, which are functionally things we're talking about. I would maintain that we've got a better level of transparency in what we're doing than I think what private companies may be up to, but that is the update on the federal legislation. I'll quickly mention that President Trump stated he expects stablecoin legislation on his desk before the August recess. So it'll be a bit of a foot race between what's happening in DC and what's happening in Wyoming, which I'm excited to be a part of. Any questions on the federal legislation pertaining to stable tokens?
Are there any questions, any color? I know Joel or Commissioner Revelle and Commissioner Naves, you've probably tracked this too, and maybe there are others online with our staff that may have perspective. And if I hear none, that's fine.
Yeah, and Governor, no, I think Anthony gave a good summary of what's going on. The GENIUS Act is the one that we have been more closely tracking due to Senator Loomis's involvement, obviously. And we're pleased to see the inclusion of the term business in the definition of persons to further away any attempt to include the commission as part of the scope of that statute and making it subject to that federal regulation. So a current interpretation from outside counsel as well as from support with the Attorney General's office is that that is trending well for the commission right now. So that's that. And then for the amendments hearing that they had last Thursday, it was kind of interesting to watch the floor debate between Republicans and Democrats and how that was going. A lot of focus on the Democratic side on consumer protection and ensuring that the passage of this statute would not further any terrorist financing, child pornography, and anything else that could potentially be detrimental to national security. And there was actually a very healthy and robust debate between the two parties on the floor about this. The hearing took over 3 hours for everything to go through all of the amendments. And what they're now going to move on is to capital markets structuring. So that's the next step on this past the GENIUS Act. And we'll be obviously tracking this closely as well to make sure that follows along on what it is that we've been doing here and can learn from anything as well that is proposed. I don't know, Joe, if you have anything
Yeah,
else.
I just would maybe add to what has already been said, but just that the banking committee passed the act with a strong bipartisan vote, which positions the bill well for consideration by the full Senate. And then if it passes the Senate, obviously it advances to the House. And in the House, the Financial Services Committee Chair, French Hill, Representative Hill, has signaled his intention to move forward with a similar proposal called the Stable Act. And so having these parallel efforts in the House and Senate increases the likelihood of this being enacted. And for people who watch these things, looks like it's a high probability of getting something done.
Excellent, thank you. Commissioner Pope or Meyer or anyone on this side? Okay, thank you. Director.
Mr. Chairman, if I could ask a question through the chair to Commissioner Naves, I'd be interested to get her perspective, or Deb, to get your perspective on what the passage of a consolidated stablecoin bill looks like from a timing perspective, recognizing full well that some of the agencies that are tagged in these acts, like the OCC, would have to take time to put their own guidance together. How would that affect, in your opinion, the rollout of the formal guidance and when other private issuers can follow along with said issuance?
So you put that really well, Anthony. These acts are just the frame, right? The skeleton of this. Then you need to get the agencies, not only at the state level, but also at the federal level, because again, the Genius Act is supporting the dual banking system, so dual path for licensing, to actually put not only chartering processes, but also supervisory processes in place for these entities. So now you're going to have to align the Federal Reserve as well as the OCC at the federal level, and then the state banking regulators in putting that guidance together. At the state level today, there is legislation either through the establishment of trust companies or money transmission licenses. However, it's likely that those get relooked as the statute passes to ensure that is providing for the safety and soundness that the act is looking to establish, including reserve management. So, we would hope, one would hope, that with the revamped desire to get this done in an expeditious manner, that the federal agencies would work to get this accomplished in a short time frame. Prior experience for having agencies collaborate and create joint manuals has been a much longer process, right? Taking years to get done. We would hope that this is something that gets accomplished within this fiscal year, and following the passage of that act. But again, it will take the agencies, the federal agencies, working collaboration, and there are different levels of engagement at that agency level that need to be aligned between the folks at the Fed and the OCC and potentially FDIC to make sure that everyone understands what needs to be done. But we will hope that there will be attention paid and this gets done in less than years, as it has been done in the past. Deb, what else?
Thank you.
Are you referring to me or Devin?
Yes, that's you.
Oh.
Sorry.
No, yeah, nothing further to add. I think Commissioner Naves and Anthony summed it up pretty succinctly and straightforward. We look forward to working, as always, with our federal partners to ensure that we are consistent with whatever the final bill represents.
Thanks. One just, I guess, sort of aspect I wonder, Director, if either you or Deborah could address. Are you seeing in any of this the emergence of any new regulations that we should be aware of, or any particular aspects that the commission should start at least tracking.
Through the chair, if the question is on whether there are elements in either the Stable Act or the Genius Act that we should just start pulling into our framework, we've certainly been looking at that. There are certain, let me give you a decent example of perhaps a delta that we've looked at, and perhaps we will come close to the pin on if we don't need to be necessarily aligned. I just mentioned that in the updated version of the Genius Act, they've got tighter reserves management moving from 7-day timeline for repurchase agreements to overnight repos. Now, our statute has us going out to potentially 30 days. But that doesn't mean we have to be out on the curve 30 days. We'll still, I would imagine, still predominantly be in overnight repos. There's going to be instances where, and this is from my own perspective, when we're looking at things, there are topics that we're covering. There may be differences of our statute versus how theirs is looking to be written, but the way we would roll out our methodology in practice would probably come pretty close to what the federal legislation would be anyway. Then again, there are instances where we're tracking things. As I mentioned, another example that I just spoke of, issuers of stable tokens are going to be treated as financial institutions and therefore under the Bank Secrecy Act. We're not a financial institution, right? So states are not necessarily in the business of filing SARs. So there's going to be there will still be some edge cases and oddities, but we're tracking all of that to figure out where we can come in to adopt the best practices, but also not try to create headaches for ourselves as well. I hope that answered the question somewhat succinctly.
I think it does, Director. I just, what I want to be particularly thoughtful about is the usability of this token, particularly in our domestic banks and others. At least I don't want to create an issue that becomes complicated for them.
Absolutely, absolutely, Mr. Chairman. And one more thing I would just quickly mention as a kind of an endpoint, and then Deb, if you have any other feedback through the chair, I'd invite you to share it. We are talking again predominantly about reserves management here. The next thing we'll be going through is another cut of the reserves management rules. What's happening with all of these frameworks is predominantly focused on reserves management. At the end of the day, these regulatory bodies want to make sure the customer is made whole in the case of anything going sideways. When we go into the next topic, which would be the token treatment, we're putting rules forward about how tokens are minted and issued or burned and redeemed, the freeze and seize policy. That's all going to be functionally net new work. There are certainly some terms and conditions of issuers we can look at to start, but at the same time, we'll be one of the first kind of, as far as I'm aware, regulatory bodies, or not even regulatory bodies, just even public entities to approach that.
Perfect. Thank you.
Mr. Chair.
Commissioner Revelle.
Yeah, I just wanted to add to Director Apollo's comments there to address your question about changes that we're seeing, and I'm sure that Commissioner Naves will have some thoughts here as well. There have been some fairly significant changes in the regulatory posture at the federal level around digital assets generally. There was an SEC rule, SAB 121, that made the custody of digital assets so economically onerous that no bank would engage in that business. And that's been effectively rolled back. And more recently, the OCC has indicated that they're comfortable with banks engaging in the digital asset business and custodying assets if done so in a safe manner. I think this is both good news and bad news for the Wyoming stable token. It's good news in that the acceptance of this and the use of it, the use case for it, will proliferate much more rapidly with this federal legal and regulatory clarity. The bad news is that there is going to be substantial competition moving forward, and the chairman of Bank of America was on CNBC a couple of weeks ago saying that they're working on a stable token or a stable coin project. And other entities who are custodians and broker dealers are working on stablecoin projects as well. So there will be, I think, more competition as a result of these changes as well.
Yeah, Joe's absolutely right. What we are still not seeing, Joe, I think which is beneficial to us, is there's no other public body doing this. Everyone who is saying, I want to go do it is a private entity, be it a bank or be a company like the current issuers or anything. But from a public body, Wyoming still stands as the first to do it. And yes, we're seeing a lot of changes, not necessarily from much from the banking. I mean, the OCC has put recently a lot of statements out, but the OCC has been the federal regulator with the greatest insiders in this industry for a while, based on their prior leadership with Brian Brooks and others. But nevertheless, the SEC, with the new leadership that they have and the crypto task force that is going on this morning, I just saw that they're dropping the lawsuit against Ripple. They have already dismissed the lawsuit against Coinbase and Kraken and everyone else. They put a statement out around meme coins and that they are not securities. There has never been that kind of a firm statement made in the recent past years, from the SEC, where they go through the Howey test analysis of a meme coin and why it's not a security, and it's a public document that can be referenced by everyone. So what we are seeing, obviously, in this new iteration of the SEC is a focus on investor fraud per se, not necessarily failure to register. There's what they call a technical infraction versus a infraction against fraud on investors, intentional fraud. So it looks like the SEC is going to be looking more at that and making sure that people are doing things the right way and the investors know what they're doing and not worrying about the little periods at the end of a sentence, or if you didn't cross your T, now I'm going to go after you. So it's a very positive change in that leadership, and it's moving extremely fast. This is 2 months, and we have already had a number of actions from that agency that we had not seen in the past 4 years. So it is something positive, and we'll just keep on watching to see where that goes. A lot of people ask, what is going to be? I'm like, we don't know. We know it's trending well. We just need to keep on watching to see what the outcome is going to be.
Mr. Chairman,
Commissioner Meyer.
I guess this would be questions for either Joel or Flavia. I got two of them. The first one is that, is there any conflict of interest for a broker to actually have their own coin? Would that be essentially maybe monopolistic if they would favor their coin over any other, I guess, free trade or free use of their, without restriction of their platform?
There has been, and I welcome Joe's input here as well, Kurt, not necessarily for brokers, but there has been a question in the past about exchanges issuing their own token, and if they would promote that above others and potentially cause a conflict, right? Because again, it is their token, which means that they will have a greater financial benefit from that token circulating with greater adoption than other tokens. So there has been questions in the past about that kind of approach. So I would expect that if that was that were to come in place, that there will be considerations around that being thought about. But yeah, there has been some questions in the past about whether exchanges are allowed to issue their own token to the detriment of other tokens and how they are promoted and distributed and adopted. But yeah, Joel.
I guess, well, the other question I got is how does the Stable Token Act, I guess, dovetail into the Uniform Commercial Code? Is it the same way that banks dovetail into the Uniform Commercial Code, or are they outside of it, or what is the context there?
And making sure that I don't speak as the lawyer for the commission, which I'm not. Yeah, the UCC gets considered, Kurt, as part of the statute. I know that has been considered and being discussed by different parties. I'm not privy to the legal analysis that was done or anything else like that, but I know that it was considered as part of this, the Genius Act and other statutes. And,
Okay, thank you.
yeah, no problem.
Thank you. And to Commissioner Nava's point, it's striking. I think we have seen this movie before, mid-1800s, when we didn't have, when we had all kinds of banks issuing their own notes and so on. So it's interesting. My particular interest is making sure that we are durable and that people look at us as a voice of stability, reason, and prudence as we move forward. So, thank you. Director.
Thank you, Mr. Chairman. Last thing I'll note, just to wrap up the whole news section of this, is several weeks back, Circle did acquire a firm called Hashnote, which offers a yield-bearing stable token. They are now integrating with that yield-bearing stable token. However, that'll be done through its Bermuda entity and only offered to people domiciled outside the United States. We continue to see that action go abroad rather than remain here. Any other questions on news, acts, anything at the federal level?
I don't hear any directors.
Mr. Chairman?
Oh, yeah, Commissioner Pope, sorry.
I'm sorry, just a couple of things. Just a few hours ago, it was reported that Kraken merged or purchased a traditional broker dealership. So Kraken now has a Wyoming Speedy Bank. They have their cryptocurrency exchange, and now they also have a traditional broker dealership. So the industry continues to expand and to integrate with traditional finance, and I think that is a good thing. The second thing that I'll mention as far as news, which I hope segues into what Director Apollo will be talking about next, which was rules and internal policies and other things more mundane. The AICPA has been very active in the accounting industry, which in an area that directly affects us. We were criticized for waiting 15 years almost before we really started looking at this industry as an accounting profession. But now we are moving forward. In November, the AICPA published the Blockchain Universal Glossary, which began the process of defining terms for accounting purposes. Then in February, they released a guide for accounting for and auditing of digital assets. And then just on March 5th, they released the stablecoin reporting criteria, which is what we will use on for the most part, on the accounting side and in preparation for audits. That reporting criteria expanded the scope of last year's pronouncement or request for comment on the sufficiency, reporting on the sufficiency of assets behind stable tokens or stable coins. And now it's a comprehensive reporting guide for entities that are in the business of producing stable coins or asset-backed fiat denominated tokens. So that I'm hoping Director Apollo segues into the next one, but I think those are major issues because I think that it affects how we, to a certain extent, how we conduct business, but really how we report on how we conduct business as well.
Commissioner Meyer.
Yeah, I guess, is there any express prohibition about using stable coins or tokens for any debt or any, I guess, use? Is there any prohibition? Can you, like, can you pay the federal government? Can you pay your own debts? Can you pay off a bank note? Or is there anything that they say that you can't do with it?
Mr. Chairman, I'm happy to take a stab at that.
Sure.
If we're speaking broadly about the ability to use stable tokens, it's not quite the situation where a vendor would have to accept it or the government would have to accept it. There need to be a carve out for that. And there would need to be wallet infrastructure set up to do the receipt of it. But if you were to look at, let's say, the terms of service, and I'll be a little reserved here, if you were to look at the terms of service for some of the incumbent stable token issuers, they do have restrictions on what you are able to use your stable tokens on. For example, firearms.
Okay.
So that's, another piece where, we're kind of looking at that. We want to make sure that we are, creating a compliant framework for ourselves, but also not shutting things out that perhaps shouldn't be shut out either.
Yeah, okay, thank you.
Very good. Further? If there is none, please proceed.
Thank you, Mr. Chairman. So to Commissioner Pope's point, we are going to move into a new cut of the rulemaking for reserves management. So last month, we had, we'll call it an initial copy meant for socialization amongst the group. And since then, we've been working over the last 3 months kind of internally on it amongst the teams, the commissioners, other agencies that have helped us. And again, I want to give a special thank you to the Treasurer's Office for all the resources who have been tagging in to help us move this forward. What we're happy to share today is a refresh copy that we believe is in pretty good shape. We are not asking for formal approval today. What we're looking to do is just further socialize this with the commission. And then following today's discussion, we would look to socialize this with some of the subject matter advisors who've been alongside us as we've gone through the blockchain selection exercise, procurement exercise, pull some of them in on this to give it a once-over. And the expectation is by the time we get to our April 17th meeting, this will be in a position to seek the commission's approval to pursue the formal rulemaking for reserves management. So unless there is any comments on the cadence or structure, what I'd like to do is just kind of flip through this and highlight where some of the key updates have been. I'll go through chapter by chapter, and I would invite our Chief Risk and Compliance Officer, Deborah Brooks, at any point when I pause through the chair, please feel free to add some context or anything I've missed. But unless there are any questions, I could just hop in and start pointing out a couple of things that have been revised since the last time we spoke.
Please proceed.
Thank you, Mr. Chairman. So in chapter 1, there are several new definitions that we've added. Some of them are pretty straightforward. You'll see things like permitted investments in here. That is simply a term that we've put forth to summarize the basket of assets we're allowed to invest in: cash, U.S. Treasury securities with a year or less to maturity, the repos 30 days or less maturity. But there's a couple of other things we've added too. One is we've solidified the term licensed service provider as the term of art for the institutional entity that is helping us circulate Wyoming stable tokens. In a previous version that was referred to as the initial token holder, we got feedback that could be a little bit confusing if you're an individual and you're getting a token. So we wanted to make sure that we carved out the licensed service provider term and also carved out up front that to achieve that status, you'll need to go through a know your business process. Second one I want to point out, which is item number H in section 3 of chapter 1, the liquidity fund account. So we'll talk definition here, we'll talk structure momentarily, but what we've done here is try to put some structures into place that would allow us to segregate the funds for the surplus that we intend to gain, that buffer of reserves to hit that 102% statutory minimum that we should be holding to mitigate against the risk of any depegging events. So you'll see as we go through is the trust account is formally defined as kind of the one-to-one backing of the token. The liquidity fund account is meant to capture anything above that. And then there's also the WIST the WIST administrative account, which is where the operational funds get captured. So you'll see throughout that we've put that kind of 3-tier structure in place to help us manage the money where it needs to be at any given time. The one other definition we added was, again, token holder is any person or entity who is the legal owner of Wyoming stable tokens. So that could be an individual, that could be an entity, that could be a licensed service provider. That's kind of the big umbrella for all of it. And then we move into section 4, where we would look to delegate responsibilities to the director, and then subsequently the director can delegate to the commission staff, which would be the C-suite of the agency. What we're looking to do here is make sure we have the authority to open up accounts as needed, move money around as needed, create, approve, amend, maintain the terms and conditions and the privacy policy associated with the stable token, generate, operate, and secure digital wallet addresses to make sure we could do key management on our side and adopt best practices to make sure those are being rotated on a recurring basis. And one thing I wanted to make sure we had here, which is item A, subsection A, Romanet 2, which is providing the ability for the executive director to terminate any written agreements we have. So if we're moving this process forward and we find that we are not satisfied with one of our vendors, in the Wyoming state contract that we'll be signing these agreements on, there's certainly the clause for termination. We want to make sure that the agency has the ability to do that without having to call a special session if we need to do these things on the fly. I will pause there. I would like to, through the chair, ask Ms. Brooks if I've missed anything along the way, or there were any other items in chapter 1 she'd like to highlight. And then if not, we could turn it over to the commission for any questions on their side.
I believe you captured everything, Director. I would add that we did make modifications to the existing terms that were in place during the previous session. Nothing significant, but tweak it to make it clearer as we make arrangements with other entities that we're engaging in contracts with. We wanted to have that consistency so that if we know what the terminology means in this context, we intend to apply it through subsequent contracts.
Mr. Chairman,
Commissioner Meyer.
looking at Romanet 4, the create, amend, approve, and maintain the privacy policy of the Wyoming State stable token. Now, are these once these are all done, is there an approval process by the board on these different things? And then you're locked in stone, and then you can, if you're going to modify them, do you have to go before the board again, or is this all within the office?
So through the chair, Commissioner Meyer, the way we have this here is that this would the commission would delegate the director and therefore the agency the ability to kind of do that all in-house. Obviously, we would share it, but terms, conditions, and privacy policies are things that can change fairly frequently. I don't think we should be changing them all too frequently without a reason behind it, but there are instances where if we are relying on a partner and something goes sideways and we need to sub another one in, much like the question you asked last week about creating kind of a back catalog of other vendors to deal with, if we need to do a swap like that, that would be a reason to kind of just update the privacy policy on our own. If there was large swaths of a privacy policy to be amended, I can understand why that would perhaps go to the commission first. I'm happy to entertain any kind of additions here that would talk about the granularity of an update or an edit that would need to be approved.
That one's privacy is really I think a big issue for a lot of folks, and maybe having that kind of sideboards on that set by the commission to start with, and allow you to make things more private, but not necessarily open the door up, is what I'm kind of thinking of. And think about that. The commission can think about that. That's one thing that I think we need to try to get right. And I don't mind things being more private, but I do mind letting people get a hold of stuff. So that's just maybe a thought we might think about for a while. Thank you.
Mr. Chairman, if I may respond to that?
Sure, yeah.
Thank you, Mr. Chairman. Commissioner Meyer, would you entertain if we were to add a clause in here where we would have these abilities following the initial ratification of these documents by the commission? Would that give you more comfort? So we've socialized with the commission kind of the base set of terms, the base set of privacy policies, and if we need,
I'm all good with you promulgating them, but when you promulgate things, it's kind of like there's a process even in the rules that we have that goes through, different offices and ends up at the governor's office to whether or not that he actually likes it or thinks it's within the tent and has a veto on it. I think we should at least go through the board overviewing them after you promulgated them. Yeah, and I think that protects your office, and I think that's really one of the duties that we really have is to make sure that the things that we at least have the oversight on that.
And Commissioner Meyer, makes a lot of sense what you're saying. I'm wondering if recommend, implement, amend, and maintain privacy policy or something along those lines might convey that notion, because if there needs to be a change, then that can be put forward, and I think this commission can act relatively quickly if there were changes on that.
Just don't want to get you in hot water.
You might want to turn your microphone on.
Just don't want you or us to get in hot water on some of these issues.
Yeah. Ms. Brooks, do you see any particular issues there?
If by issues removing the word approve in that, right? So it's create, amend, and maintain?
I
Is
think
that what Commissioner Revelle is suggesting?
I think what I think the good Commissioner Meyer is saying is the create and amend language to some degree opens the door potentially for the staff to move without the approval of the commission. So we were trying to find a way to be able to recommend and then implement or something along those lines.
Yes, thank you. If I can have time to think of it, I'm not envisioning at this juncture a disruption in that particular phrase or suggestion by the commissioners. But in the interest of time, if I could think about it on the back end and get back to you.
Perfect. All right, thank you. That meet your.
Yeah, I think so. It might be that they can do all this stuff, but that, we've got 60 days or something to look at it and basically deny the change, and if the change is denied, then has the full force or something.
Yeah.
Something like that.
All right, Director, thank you.
thank you, Mr. Chairman. And certainly do want to recognize the speed at which we're able to move. So thank you for that along the way. Moving on to Chapter 2, this is the issuance of the Wyoming stable token. So one of the key changes here is at the end of this chapter, which is on page 7, the item section 3G, where we say that all Wyoming stable tokens issued by the commission or on behalf of the commission shall only be issued on blockchains or other distributed ledgers approved by the commission. Wyoming stable tokens migrated, bridged, transferred, or otherwise moved to blockchains or other distributed ledgers not approved by the commission shall not be considered Wyoming stable tokens and shall not be subject to these rules. So this, and I would invite Commissioner Naves, who certainly has some experience here, to speak on this. if appropriate. But what we want to do is make sure that people are taking Wyoming stable tokens and moving them off of chains that we support and we've done our diligence on and want to do something else with it by wrapping it and moving it across chains. And of course, there are some technical ways we can, lower the amount of the, activity in which that happens. But we would not count that as Wyoming stable tokens on our side. That's typically how the policies work for the incumbent private issuers. They certainly identify, this is the population of our token, the population of our token that's wrapped on different chains. But typically it's not considered to be part of that balance sheet, for lack of a better term.
Yeah, you're right, Anthony. There's got to be a clear understanding, which I think this commission all appreciates and knows, that the token is only a Wyoming stable token if there's a reserve that is being maintained by the commission backing it. Anything else is not a Wyoming stable token, right? So any token that gets issued for test purposes, any token that gets issued in anticipation of backing, none of those are considered Wyoming stable tokens. They're just a token technology item. And anything that gets wrapped on top of the Wyoming stable token is also not a Wyoming stable token because it does not have the reserve backing it. The reserve backing it is sitting with the underlying token. So in looking at the proposed policy, it was had to be really clear on what it is and what is not, and potentially even defining the token as backed could cause confusion because the token is always backed. If it's not backed, it's not a Wyoming stable token. So that is just by its nature. So you don't have to define it that way. But care was put in to think about that and make sure that there was no potential confusion on the part of the holder, that if the name is used in conjunction with any other offering, that the holder does not believe that is a Wyoming stable token.
Thank you, Commissioner. Commissioner Pope.
Okay, so I absolutely agree with the note or with the rule. No issues there, but the accountant in me has to ask if and one of our tokens was actually bridged or transferred, how does that work for accounting purposes? Is that part of the freeze, seize? What do we, because on our balance sheet, if something disappears, there has to be a corresponding entry somewhere. And so I can see if another chain issues something that is called the same thing. No, that never enters our balance sheet. It never is backed. It is not considered anything except an abridgment of our rights. However, if something is bridged, moved, attached to something else, or anything like that, it becomes an accounting entry somewhere that has to be reported. Maybe Commissioner Navas can fill me in on that process.
David, I'm actually going to defer to Joe, our CFO, on that, and maybe Joel Reville. I am definitely not equipped to be talking about accounting or anything that goes in a balance sheet, but I will tell you that from a holder position, right? Holding the token, that's an asset that is assigned to that person. That person will have the access to that token by holding the keys to it and having it that way, even if it's moved on chain to somebody else that is not the initial token holder. And then the records of the entity will still show that token in circulation with the reserve being held for it, irrespective if it's party A or party B holding it. But Joel, both of it, can you chime in and provide additional context for David, please?
Joe, please
Oh.
go ahead. Yeah.
Oh, okay. Thank you. A good morning, everyone. We definitely have to put together the general ledger and the chart of accounts to record any such activity. We haven't had a chance to do that as of yet. We've been building all of the models to kind of see where the risk areas are with regards to the reserve fund and the liquidity fund, but we certainly do have to put that information together and share it with the commission.
Director, Commissioner Pope, you raised an interesting, the same thing that was running through my mind. And my question is the policy clear enough on what happens in the event of a seize, particularly? You know, that where does that asset go? Where is it on our ledger? Is there a need to think about escheatment? You know, those kinds of things that could be valuable.
Mr. Chairman, I agree with those questions, but I would imagine those also possibly come at a later date with the other user agreements and everything that we have. But also in this case, if something is bridged or added onto, my biggest question, I guess, now that I've thought about it, is are we actually relieved of our responsibility to back that token if it is then used in a way that is contrary to this rule? So again, in my mind, there's a clear difference between someone on another chain issuing something that has our name on it that is not backed, and then becomes, you know, something that is that we don't have to and have no responsibility for, but something that originated as a backed token and then is taken and I don't know, and added onto or moved to a different chain somehow, all of that. Does that relieve us of any of our responsibility? And my guess is no, but but that's kind of where I'm going, is I don't really know what the thought is and what we would do in that instance based on this rule, because it says that then it becomes not a Wyoming stable token. If that's the case, are we relieved of our responsibility to back it and to
So-
redeem it?
So David, this rule is not meant to be the terms of use for the token, which will describe some of these elements that you're talking about, and the holder, because those terms of use will follow with the token irrespective of who the holder is. Anyone that is holding the token is bound to those terms of use irrespective of what that person is. And it would describe the rights and the obligations that both the commission and the holder have in respective to that token. So that will be addressed there. Then as it respects to the governor's comments about seize and freeze and escheatment, for purposes of the existing issuers, because they are licensed by different regulators, right, at the state or federal level, they follow escheatment requirements based on the state that they're dealing with. So we as a commission, and I think have to think about that because those requirements follow the licenses that they have through those states. And then when the token is frozen, and then the asset that is respective to that token should be then allocated in a separate account and held separately from the tokens that are actively being used and in circulation, because now that token is frozen and held. And this is going to be part of the of Joe Saldana's policies that we're going to be the commission should put together for the financial operation of this token. I don't think that this reserve management policy is meant to address those elements. Otherwise, it will become the only policy for everything. So it will be a body of policies with this one simply addressing the bespoke element of that, because this is a conversation that and a question that I had for the executive team, Anthony and others, as in putting this together, what is it meant to address and what are the policies that will come with it as we're thinking about the end-to-end operations, financial operations of the token. But that has been my experience in looking at this.
Mr. Chairman, go ahead.
I will end up my comment here. I totally agree with the policy. But I'm going to make just one suggestion. I think we need to have a G and an H, and G should deal with possibly
Counterfeits?
counterfeits. I think that's, great term. It should just delineate between a counterfeit, and then in H, we deal with add-ons, or, because, you're going to have a situation where on a different chain, you're going to have a token that claims to be backed by the Wyoming stable token, which it may or may not be, but we still take no responsibility for that token or any other derivative that may be produced from our stable token. And I think that just those two things need to be delineated and separated out, just so there's no confusion on that right now.
Now, I guess that brings up a couple of questions, Mr. Chairman. One is that if it migrates off, the people that we have licensed to run on their rails, can't they have a switch that makes certain that it doesn't get on any other blockchain or rails that's not licensed?
Through the chair, I would invite our Chief Information Security Officer, Keith Lowhorn, to tag in on that. But just to give a succinct answer, I think it would depend on whether we support the chain or not, right? If it's a supported chain, we would expect to have those freeze and seize capabilities. If you're migrating to a different chain, you may or may not, but I would defer to Keith as the.
I guess what I'm assuming is that any of this migrating bridges or transfers or move to blockchains, not approved by the commission. So, yeah, it says right here, if they're approved by the commission, they can go any place they want to. But if they're not approved by the commission, I would think our agreements would say, okay, these are the chains that you're not approved to migrate to, and that would be in their terms of use of using our token, and that it'd be rare in circumstances for those to actually cross across that barrier.
Right. Mr. Lawton.
Yes, Mr. Chairman, I just wanted to clarify the way wrap tokens work and any similar technologies. And Commissioner Pope described it pretty well with the word derivative. So it's similar to a safety deposit box. So if you took dollars, put them in a safety deposit box, and then used that as collateral. So essentially, it's not our token. Our token is used as collateral for a derived asset. So we don't have direct control over that, similar to if you used a stock or cash as collateral. But to Commissioner Navez's point, we do not recognize the derived asset. So if they take their tokens back out of that safety deposit box, they can spend them like they in their original design.
And Mr. Chairman, if I may?
Yes, Director.
Thank you. I do want to reinforce, thank you, Keith, for the explanation there. I do want to reinforce the thing that Commissioner Navas said a minute ago, which is we're going to have a whole quilt here of rules and policies. Commissioner Pope, even your first question about what happens if tokens are zapped, that's going to be downstream of the token treatment policy, right? We talk about what that interdiction might look like, because that's going to be downstream of the technical turning of the keys. Now, that being said, there is going to be minor overlap between these. I think we've already updated this document to take a couple of things out that we'd expect to be in the token treatment policy, or rules rather, with more granularity. And then there will need to be, of course, policies along the way. So let's just keep in mind as we go through these that the framing here is, of course, everything is downstream of statute. The rules are meant to be broad but prescriptive. And then as we get into the nitty gritty, that's the policies, procedures, and documentation thereof That'll be, who's hitting the buttons to do which action at an extremely granular level.
So at this time, we don't have any approved licensed derivative authority for the Wyoming stable token or contemplated.
Through the chair, Commissioner Meyer, I would think that would be downstream of us working with and testing out the platforms that we are currently pursuing with Layer 0 and Fireblocks, because that's going to give us a combination of tokens on blockchains as well as the keys that allow us to move them. So we understand what that will enable. We do, again, need to get hands-on and test these things out ourselves, but that would be part of the very robust set of user acceptance testing that we're working through with them to delineate what all that looks like.
Maybe this would say non-approved derivative used for collateral or something in this paragraph that would define what we're really thinking about. Okay. Anyway, we're getting into working group stuff now. I think I'm going to leave it to the working group.
Mr. Chairman?
Commissioner Pope.
Thank you. I just want to reiterate, I believe that both of these issues, which I believe are two separate issues, I think both of them deserve the force and the force of rule, which is much stronger than user policies, user agreements, things like that. I think we need to make a statement that we do not support or recognize anything that is counterfeit. And if you decide to take the stable token and use it to create a derivative, we take no responsibility for the derivative product afterward. And then in the user agreements and terms and limitations and all of that, we prescribe a remedy for any situation in which that is used. But I agree with Commissioner Navas, I believe, and everyone in the working group that that these deserve the force of rule as opposed to the downstream part. I just think they need to be separated out to avoid confusion.
Fair enough, Commissioner Pope. And the other thing that I'm wrestling with, Director, and I just mentioned it, and I understand it could be subject to another portion of rule, but under reserve asset management, we're establishing a number of accounts. And yet in the instance that something moves off chain and is no longer, I mean, the implication here is that it's no longer backed, but those assets still remain on the ledger with a sort of indeterminate disposition. I don't know if there's a policy statement that should be here held in, because they're not really holder accounts. I mean, they're sort of just there. Should they be part of one of those accounts, or should there be an account? I've raised the issue.
Thank you, Mr. Chairman. I think we're getting a lot of good feedback on this one. The chair, Commissioner Pope, I've got good news. He said you have feedback. You can certainly help us draft it in the next pass of it. And I think there's, I think one of the things we could do perhaps with some of these nuanced issues and really getting down into perhaps a final pass on this over the course of the next month, as some of these thornier issues creep up, to the extent that we feel that they may not be addressed in this, we can kind of put them in a running list and say, we're going to address this here to give a little bit more granularity about where we expect these things to be resolved. So that way, by the time we get to potential launch in the not too distant future, there's no remaining questions. We know where everything is going to be addressed, whether it's license agreements, T's and C's, privacy policies, rules, et cetera. So.
Yeah. You do understand my point, though. There is part of the reserve that no longer is backing anything, but has an indeterminate purpose and indeterminate course of action. That's all I guess I'm getting at. I think that's
And Mr. Chairman, the point is well taken.
yeah.
I'm sure I could say 2 or 3 things about where that might end up, but they would not be the most educated positions. So I'm happy to take that back and work that through before we get back to you on that.
Perfect, thank you.
With your permission to move forward, we'll go into Chapter 3 for reserve asset management.
And if you guys could shut off your microphone, just if you're chatting. Thank you. Okay, go ahead.
Sorry. Thank you, Mr. Chairman. So in Chapter 3, reserve asset management, one of the things we've done here is incorporated the existence of an investment policy statement that the Stable Token Commission would enter into with the counterparty on the reserves management side. So particularly the investment manager. We would look to draft that document in conjunction with the State Treasurer's Office. And we are going through some versions of that now as we speak. The other thing this session does is clarify what we refer to as the cascade. So if you look at the statute, you would see that there's got to be money in the trust account. There's a buffer to get to 102% of reserve of the collateral. Then operational money comes in. Then there's a future expenditure budget. Then we have to pay the state back. Then we also need to get money swept into the school foundation fund on a quarterly basis. So what this section does, I'm not going to go through it piece by piece. I'll let everyone read it at their own leisure. But what we've looked to do here is really delineate how this waterfall works. These steps that need to happen before money starts coming back into the operational account to make sure the stable token is fully reserved 100%. We establish that buffer in the liquidity fund account. And we also, the commission has the ability by majority vote to dictate an amount of excess reserves above 2% of the notional value, of 102% of the notional value of the list, that could be maintained in a liquidity fund account. And Mr. Chairman, this is something that you brought up many moons ago. If we are able to kind of stack reserves and we think that there is a imminent financial event on the horizon, the commission can make the call and say, let's jack it up to 105% or what have you. Now, one thing I will mention is internally we've been stress testing the 102 a bit. We obviously want to be above that threshold. There are a couple scenarios where that can become difficult. One of those would be consistent and persistent growth. If we're adding several $1 million every day, the money gets invested, the interest is going to come in on a bit of a tape delay, right? So we'll always kind of be building up to that reserve. So that's one consideration. There's also the consideration where we have, 100 million stable tokens outstanding. We have $102 million of reserves in the bank, and we get an order for $10 million worth of stable tokens. Now our 2% buffer is no longer 2%. Now, conversely, if someone, redeemed 50 million of those, then we'd be, quadruply buffered up. But, we're poking around these scenarios because we want to make sure we respect the statute. We also want to make sure that we're not unintentionally inhibiting growth of the stable token. And I think we would need to address that in this set of rules as well. I'm not sure if it's done at this point in time. This is certainly something for the next cut to address, but we're eyeing that, and Joe is putting a number of models together to kind of assess that.
And Director, I know we mentioned this last go around, and I think we basically said there wasn't necessarily a need, but do we want to consider gates on any of this?
Mr. Chairman, that would be at the pleasure of the commission. I think gates I believe this is what I said last time. I hope I'm being consistent, but gates in the early running, I think makes sense. If we are looking to onboard new chains, if we are looking to do some geofencing from the early days and we have smaller amounts and we're testing things domestically before we go international, or perhaps we try to limit the amount of use on decentralized finance platforms before we go broad and things get moving. But those, I can see them being there in the early days, but those gates would be hard to maintain if we're a stable token with, let's say, $1 billion in reserves, and you build that buffer up, you get another big ticket that comes in, it could be difficult to maintain that.
Okay, thank you.
Mr. Chairman, on page 9, Romanet 4, it looks like we can go over that 2% as determined by the commission. Just in case if we got a higher growth rate, we can buffer that a little bit so it doesn't get below 2% on the growth rate.
Mr. Chairman, Commissioner Meyer, agree with you on that, you know, especially since it sounds like per yesterday's Fed meeting, the Fed funds rate is going to stay at 4.25%, 4.5% for the foreseeable future. So if we're able to kind of stockpile in the early innings, I would think we would certainly look to do that.
Proceed, go ahead.
Thank you, Mr. Chairman. I think the last piece we have here is did I cover anything? Yeah, so just to wrap up Chapter 3, we've established a reporting cadence to the commission, what that entails, and we've added in conformance with the Wyoming Records Retention Schedule. So with that said, the last chapter here is Chapter 4, redemption of the Wyoming stable token. Have some language in here around making sure we verify and perform compliance checks to confirm any kind of redemption requests that come in. We are comfortable with those requests, and we have the metadata we need to perform the liquidation of WIST and return dollars. And I'll also note that in this section, specifically in Section 3, we do state, you know, at this point, we're not looking to go direct to customer from the Stable Token Commission. We are looking to leverage licensed service providers, and that is Section 3A. However, in Section 3B, if there's any kind of final judgment, court order or decree, there may be a, quote, break the glass kind of contingent situation where we as a stable token would return funds directly back to a token holder. That might be in the case of the insolvency, let's say, of a licensed service provider. So we would not look to do that, but we want to carve out kind of that emergency capability in case we want to get customers their funds back. And I think that is all of the high-level updates I wanted to touch on. Once again, through the chair, I would ask to recognize Deborah Brooks, in case she had anything to add, or any other members of the team, and then would certainly entertain any questions from the commissioners.
Ms. Brooks.
Thank you, Chairman. Nothing further to add. I think the director summarized very succinctly and accurately what we've been working on the back end for some time. Of course, it's still in draft mode and subject to changes and revisions between now and the next meeting.
Just wondering about the redemptions, that's net of fees of any transfer of the money, to make sure that, you know, small amounts, you can do it in blockchain, but small amounts, you can't do it with a, you know, a $10 wiring charge. So just wanted to make sure that we were covering ourselves, that it was net of any transfer fees.
Through the chair, Commissioner Meyer, if you were to look at example in Chapter 3, Section 2, subsection F, no bank charges or fees shall be paid from the funds deposited in the trust account. To the extent that such charges or fees are not deducted from the gross amount of investment earnings, such charges or fees shall be paid from the administrative account as an operational expense. So to your point, we want to make sure we're preserving that one-to-one backing. If for whatever reason any fees hit that account, we're giving ourselves the ability to kind of put that money back in and take it on as an operational expense rather than, you know, have a hit to the trust account.
Okay, so I want to have a clear thing on what you told me. Let's say that somebody wants to redeem in cash $10, and it's going to cost $10 to wire that cash. How much cash is the person going to get? You know, if they redeem $10 of a stable token, and are we going to pay the $10 fee out of our accounts?
Through the chair, to be clear, Commissioner, we would not be paying fees on behalf of a customer.
Okay.
It would, the amount of fees being assessed would be dependent on the licensed service provider, and that would kind of be between the end user, the token holder, and the licensed service provider. We would not be assessing any fees.
We're not in that loop at all.
Sorry, can you repeat the question?
We're not in that loop at all.
No, we shouldn't be.
Okay, thank you.
Yeah, so just to be extremely precise, again, the hope for us is to work directly with these licensed service providers. So it's kind of a bilateral arrangement or agreement with these larger institutions. They send us money, we send stable tokens. They want to redeem, they send us stable tokens, we burn them, we send them the money back. it should be bilateral in that capacity. And we're not assessing any fees on them. I hope they wouldn't be assessing any fees on us. And if they want to have fees assessed when they're going back and forth with the end user, that's their own prerogative. What the clause we have here in the rules is more about any kind of like the financial management of the account. We're working with the reserves manager. They shouldn't be taking any money in the trust account. It should be understood that those fees are coming out of the investment earnings. So we're netting that out. But to the extent, for whatever reason, a fee hits the trust account, we're giving ourselves permission to put that back in because we don't want to be paying those fees, because if we paid everyone's fees, we'd start depegging pretty quickly. So.
Thank you, Mr. Chairman. Got a number of other questions that I think, as we're looking at the rules, since you've so kindly invited me to chime in on them, but those can wait. My big question is, how are we doing on timing with the rules, as far as being able to get them in place before a July, potential July release?
Through the chair, Commissioner Pope, with these, I think we're in decent shape. You know, for the token treatment, that might be a little tight. I think we can have to map that out.
Unless you have a commissioner that insists on helping rewrite.
Well, it depends on how much you want to rewrite and how fast, I guess.
Yeah, not much, I promise.
Well, I also heard it's tax season, so it might be helpful. With these, I think we're in pretty good shape. As Mr. Chairman, you mentioned earlier, this commission has always been willing to meet kind of on the hop. So if we need to expedite things, I think there are certainly some vectors for us to do that. I'll mention Ms. Brooks has already been working on, at a minimum, we've gone through the outline of the token treatment. I know we have externs who are working on looking at, terms and conditions and privacy policies of the existing issuers and pulling in data from that, much like we pulled in data from many promulgated and proposed legal frameworks for the reserves management here. So we're moving as fast as we can in all the directions.
Very good.
Mr. Chairman, if there's no other questions, I would suggest we move on to blockchain qualifications, which is our next kind of big topic. And I think we'll try to be, at least from my side, I'll be a little quicker with this one. So you'll have two documents in front of you, the blockchain selection criteria Q1 2025 update memo, as well as the actual update that we will host on Notion. So to quickly level set, and this is all in the background provided in the memo, we've gone through the initial blockchain selection through our working group in fall of last year. We came up with our 9 candidate blockchains ahead of this whole procurement process. But following the amount of excitement and interest we have in the project, we have discussed and put forward rolling qualifications and other ways to get other vendors and other networks involved. So where we are now, following a pair of conversations about this in our special meeting in February and then our regular meeting in February, we had presented a memo to give a cadence that would say, we'll update criteria at today's meeting to incorporate or change anything we need to address following the last round of this. We'll make sure we have mechanisms in place to proactively message to people who represent these different blockchains that we're doing this exercise. And then once we get, hopefully, these approved by the commission, we will post everything online. We'll start socializing this with those representatives, and then we're going to re-perform the blockchain selection assessment over the course of March into April. Now, again, I certainly appreciate some of the dialogue from the last discussion about the additional effort here. I will note that everything we've done is transparent and repeatable. We have, for lack of a term, schematics of how we addressed and assessed all of these different criteria for all these blockchains in the last go around. So really it's a matter of just following the same links, updating the data, seeing where these are, but also to the point Commissioner Myers made along the way, reaching out to first party resources for their take. And then of course, trust but verify, to put in the audit parlance from the older days. So unless there's any questions off the cuff, I'm happy to kind of dive into some of the revised criteria here. and get the commission's opinion on those. Hearing none, I will move forward. So middle of page 2, assessment. This is where we talk about the updated criteria. So if you recall from the first version of this exercise, there was 5 binaries that every blockchain would need to pass through that gate and hit all 5 of those before we could score them. There's one update and one add here. The update is for the feature of on-chain analytics. This is making sure we have the ability to monitor transactions on a relevant chain. In the past, we use support by 2 of 4 on-chain analytics firms that supported domestic law enforcement as the proxy to figure this one out. Now that we are working towards engagement with an on-chain analytics firm, we want to make sure that we're not trying to onboard chains that would not be supported by the infrastructure that we're putting in place and paying for. So we've updated this one as the blockchain to hit this criteria, the blockchain must be indexed and has feature complete support from the on-chain analytics providers engaged by the commission. So that's the update there. And then in terms of an add, we added vendor support more broadly, which is to say the blockchain is supported by vendors engaged for the purposes of token development, blockchain infrastructure, and financial audit and attestation, excepting for foundations willing to provide these development services pending commission approval. So there's a bit of vernacular in there. What we're trying to say here is, I mean, quite obviously, we want to make sure that if we're going to bring on a network, like I said with the on-chain analytics, that the network is compliant with the group of vendors and providers we're putting together. That being said, there are certain features where a blockchain foundation may be able to develop some of these criteria themselves. And we want to at least create a little bit of an opening here to say, if they have the capabilities of building infrastructure out themselves, if they are willing to potentially fund that and test that and get it up to the qualifications and quality we're looking for, we might be able to create a bit of a permission here around that. So that is the binaries we have. Moving on to the scoring rubric, there again is an update and an add. The update is around the Wyoming domiciled foundation. We want to be specific here because we are talking about, with the blockchain selection exercise, open source technology and not particularly a firm that is building it, but how these typically get deployed is through foundations. They typically have nonprofit structures, and they're the ones who are responsible for the initial development and issuance of a native token on a platform. Not always the case, but typically the case. We wanted to specify that if we're going to give points for a Wyoming domicile, it is for the foundation that will be issuing one of these blockchains or creating and deploying one of these blockchains, not necessarily a private company doing so. That would be more on the vendor side for RFQs and RFPs, which we're also opening up the funnel for that through the rolling qualifications. And then we've added the definition of a foundation here, giving all the context I just said, to make sure we were clear on that, because that may not have been so clear in the last round. We want to make sure we were clarifying things on our side. Moving to additional benefits, there are 2 adds there. One is emerging market trends. This is the example that we gave in the last go-around, which is that the blockchain in question that we're assessing hosts new and emerging sections or sectors, such as artificial intelligence, distributed physical infrastructure, VR, in-game assets. If those use cases are deployed, again, we use the term existing and demonstrable. If they are in that kind of composition on different blockchains, and there's 2 or more of these projects that are deployed and utilized, we give X number of points. For 1 or more, it's 1 point, and if there's none of those use cases out there, no points granted. Second one here is, again, foundation support, going back to that concept. If a foundation is willing and capable to provide resources for technical development, liquidity on the network, or marketing support, we may be able to give additional points for scoring there as well, and just kind of grade it across the different levels of support that could be offered. So before I get into next steps, are there any questions around any of those criteria that we've updated or added?
Any questions?
I have one, Governor. Sorry about that.
All right.
Anthony,
And then after that, I'd see Commissioner Wallace. So Commissioner Navis.
I'm sorry. Anthony, with these changes, would it impact any of the blockchains that have been have met the criteria thus far, meaning that they could be removed from the list of approved blockchains, candidate blockchains, or no?
Commissioner Naves, we'll certainly look into that. The way I've structured this in the next steps section, to kind of jump ahead a little bit here, is the focus here would be on blockchains that didn't quite make the cut last time around or weren't part of the evaluation exercise. I think we certainly can apply these criteria to the 9 candidate blockchains. Again, one of the things we talked about last week was in terms of doing this effort, not going backwards, revisiting. If there were anything that was, a big change, perhaps we can go revisit it, but we've already looked at some of these scores from the last go round. Said if we deduct a couple points here or there, would it change the composition? The answer to that question was no. But I will leave that to the commission's determination if you want us to go back and redo the exercise for the candidate blockchains that have already been put through the mix and been part of the procurement process to date.
Yeah, my only concern is to ensure that everyone has gone through the same criteria, whether they're now or later, they're all meeting the same thresholds and they're all being looked at the same way, whether it was originally or now. I think they should always stand on the same footing, irrespective of what time that they were brought into the process. That's my only thought. Thank you. That's it, Governor. Thank you.
Director, thank you, Commissioner Naves.
So, Mr. Chairman, just back to Commissioner Naves, and sorry, Commissioner Wallace, cutting you off, but I just want to bounce this back to you because I agree wholeheartedly on wanting to keep parity amongst all these assessments. And I think for where we are now, it certainly makes sense because we haven't deployed anything yet. What I would ask the commission to think about is a scenario in which, hypothetically, we are not doing the Q2 exercise, but the Q3 exercise we've deployed on several chains. And let's say there's a massive outage on one, other hacks occur, and one of the chains we've already launched on no longer hits the bar for contention. And to be very clear, we haven't set that bar yet either. That's something that I would expect that our team within the agency would put forth for the next go round, whether that is a ranking of the top 10, whether that is if you scored more than X number of points. Those are still up for discussion. But I would be concerned if we are constantly rebasing post-launch, what happens if someone falls out of contention after we've already got several tens of millions of dollars of liquidity on their network?
Yeah, I think it's an interesting point, and I think both sides have valid considerations here. It's worthy of thought. One of the things, Commissioner Naves and Director, that has been going on in my mind, do we periodically review all the issuance and then have a policy for resolving chains that might drop off? And obviously not prepared to talk about that today, but it might be something that we do just to make sure we maintain a platform that's fair and equal across issuance.
Mr. Chairman, in full agreement and through the chair to Commissioner Naves, just playing a little bit of devil's advocate here because I think these are questions we'll need to grasp along the way. I don't think we'll have those answers today. What I will say is this is one of the reasons why we've proactively pushed to have this review done on a quarterly basis because we'll have to, because not only will the technology change and the user base change and all of that, we will have to grasp some of these questions along the way as well.
Yeah. Thanks,
No.
Commissioner Wallace.
Thank you, Mr. Chairman. I think my question is kind of along those same lines, but as far as is there any process that we would have in place for the on-chain analytics provider that we engage? Would they have a process in place to reevaluate any of those potential blockchains that they currently aren't indexed or using?
Through the chair, excellent question, Commissioner Wallace. So in our discussions with several of those on-chain analytics firms, they all have roadmaps, right? So here's the chains we support today. Here's the chains we expect to support in the next 3 months, 6 months, 9 months. And a lot of that exercise for them is their own kind of prioritization, kind of like we're doing here. They do the same thing based on user activity and market cap, all of that. If One of the reasons we wanted to add the foundations back in, again, in terms of increasing the scope of the funnel, those on-chain analytics firms are able to expedite or bring on additional developers to incorporate other networks that may not be supported today into a supported kind of mature ecosystem, but it takes resources, which takes time and money. So if there's foundations willing to put money in to fund that, I could see that being one way by which more of these chains that may not be supported by on-chain analytics firms do become supported. I do not think we have the budget to be funding that, but if there are firms that see what we're doing, or foundations that see what we're doing and say, we want to be part of this, we've got X capital, this is a wise investment for us, and then perhaps they go down that route, but that would have to be their prerogative, not ours. I don't think we should be putting our finger on the scale too much there.
Yeah, thank you. That answers my question pretty much. I just want to make sure there isn't any indication that there's any conflict between that on-chain provider and who they're backing and who we're contracting with.
Mr. Chairman, if I could just for a quick clarification there, conflict in terms of who's perhaps investing in the on-chain analytics firms versus investing in the foundation?
Yeah, because I mean, if we're, by choosing that on-chain analytics provider, are we limiting ourselves to just the people that they work with and not providing another opportunity for somebody else?
So through the chair, Commissioner Wallace, again, a good point. If we had a much larger budget, we'd have 4 different on-chain analytics providers and a much broader scope of coverage, right? At a certain point, we need to be relying on the existing and demonstrable capabilities of all these different firms. And while it's lovely to have full spectrum coverage of every network out of the gate, that's not the reality of the technology. So I think with the vendors we've ended up with, it's, for example, the on-chain analytics firms that's in scope for us right now supports out the gate 7 of 9 candidate blockchains. That's pretty good. But if we wanted to have that full spectrum coverage, we'll take time and resources from ourselves, from these respective firms to build out those capabilities.
Thank you. Okay.
Okay, so if there are no other questions on that, to go into next steps. Oh, Commissioner Navas has a hand up. Thank you.
Oh, Commissioner Navas. Sorry, didn't see your hand.
No, that's fine. I don't know that we need to discuss this much further, but in talking about Governor, about revisiting things, this is where Deb's and Keith's role becomes so critical, because this is ongoing risk management and as well as infrastructure reviews of this project, right? This is never a set it and forget it situation. You need to be constantly analyzing not only the ecosystem from a security, InfoSec security perspective, where Keith's role is so critical, but also looking at external factors and threats to the network and the systems, where Deb's input is going to be highly valuable in looking at it and reassessing and recommending to the commission what we should be doing or not doing, right? And what kind of changes we should be considering or not. So determining the frequency of those reviews, to Anthony's point, quarterly may be appropriate, and this is something for the commission to assess based on the risk assessment of the token. But nevertheless, if there are threats that occur, then assessments need to be made at that moment, and stop and look and see what we need to do, right? So this is where the executive team for the commission is going to be so important, making sure that we're being informed and making decisions as we need to, as the infrastructure and the environment needs to be adjusted. So that's it.
Excellent points, and so thanks.
So, Mr. Chairman, just to quickly touch on next steps, what we would look to do after perhaps a motion to approve all of these would be to publish these revised selection criteria to the commission website. Reach out to existing contacts that we know already building on different networks that were not previously selected as candidate blockchains to inform them of the updated criteria. Reach out to new contacts who registered their blockchains and contact information via the request for information consideration form that was created and presented last week, which has been live for about a month or 3 weeks. And then perform the assessment of blockchain networks not previously selected as candidate blockchains using first-party information and verification thereof with public information. Last one on here is assess whether a parallel process should be initiated for UTXO-based blockchains if said networks lack sufficient compatibility with vendors engaged by the commission. And this last one speaks to the point that Commissioner Wallace just made. If we find that there are a number of networks that are being excluded solely because we're not supporting the infrastructure that they are on, perhaps that becomes a separate process. Again, whether we need to create a different box for these teams, these blockchains, these networks, whether it's a kind of another RFP process along the way that would be focused on the token design and not the rest of the infrastructure, because some parts of the plumbing don't need it, don't need to be refreshed, but that could turn into a very big discussion. So I want to be a little bit just careful about that. But I do think this speaks to the point Commissioner Wallace just made, and if we're excluding people unnecessarily or to a level that seems uncomfortable, we should scrutinize that and figure out how we can move forward with a broader set of networks.
You bet. Very good.
So the director's recommendation would be for authorization of the director of the designee to update and upload the revised blockchain selection criteria for the first quarter of 2025 and perform the refreshed assessment of blockchains for consideration as future networks for issuance of Wyoming stable tokens.
So you've heard the director's recommendation. Is there any further conversation? If there isn't, Commissioner Pope, looks like you're getting.
Mr. Chairman, I would move that we adopt the motion as written by Director Apollo.
Okay. It's been moved by Commissioner Pope, seconded by Commissioner Meyer. Any discussion? Any discussion? Hearing none. All in favor signify by saying aye.
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 That motion carries. I see Joel has his hand raised, so.
Thank you, Mr. Chairman. So moving on to the next topic at hand, that is token name and intellectual property protections memo. So for this, I would recommend that this conversation take place in an executive session for the purposes of receiving legal advice, because we are talking about intellectual property and trademarks here. We have the Snake River Room set up for a side conversation just down the hall. And Steph has set up a separate Google Meet link so we could have that conversation should the commission move to have that privileged conversation.
So members of the commission, you have heard the director's comments. If you're so inclined, I'd entertain a motion to go into executive session to take advice from legal counsel.
So moved, Mr. Chairman.
Thank you, Madam Auditor. Is there support for that motion?
Second.
It's been seconded by the treasurer. All in favor signify by saying aye.
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 All those have been raised. So we will now wind this down. I think we're going to come back to public session later. We're going to be removing ourselves to another location for that briefing. Thank you. We're all set.
So, Mr. Chairman, coming out of the executive session, again, we don't take actions there. If there's any action to take as a result of the conversation, I would put that to the commission.
Very good. What is the pleasure of the commission? Director, do you want to repeat your opening statement?
Sure, I can do, Mr. Chairman. The director's recommendation would be to authorize the executive director or designee to complete the necessary applications to trademark up to 5 potential word marks for the token name, up to 5 potential word marks for the ticker, and work with the University of Wyoming and the Secretary of State's office to license the bucking horse and rider design mark for the stable token with the relevant federal and state organizations.
It's been moved by the treasurer. Is there support for the motion?
Second.
It's been seconded. I got Commissioner Pope before I got you. Sorry about that, Auditor. Is there any discussion?
Yes, Governor, quickly, I would ask to add to the recommendation that the director work with the Attorney General's office for the clarification of any elements in that, in those stickers or the token names that could have a legal challenge prior to filing, please.
Friendly amendment, Mr. Chairman.
Okay, and that is part of the motion now, if the seconder approves? Very good. If that's the case, any further discussion? All in favor signify by saying aye.
Aye.
Nays? That motion carries. Thank you.
Thank you, Mr. Chairman. Keeping an eye on the clock here, those are all of the agenda items I wanted to cover today. Of course, I am more than happy to answer any questions remaining from the commission, but ahead of that, just to quickly tie a bow on this from my end, to be specific about next steps, we will be prioritizing the execution of those vendor contracts we talked about earlier on. Should we be able to engage with the smart contract developers in the coming days, we would look to launch test Wyoming stable tokens on a blockchain testnet, so they would not be backed or reserved, but we would do a bit of a quick operational technical test here to get these things in circulation on, again, test nets to make sure that they, the pipes work, and then start putting things together. And we'll also pursue the blockchain qualification scoring exercise over the course of next month before we meet on April 17th. Before our April meeting, I will be in DC at the DC Blockchain Summit hosted by the Digital Chamber. I will be on stage with the chairman doing a fireside chat regarding all the progress we've made over the last 2 years at this point. So congratulations to the commission on that. We've certainly received a lot of inbound interest regarding that presentation. And we have the monthly meeting in May on May 15th. So if there are no other questions, last thing I'll say is we have public comment next, the duration of which will be limited to 3 minutes per speaking party or 1 question from an online participant. Speakers will be asked to provide their first name, last name, and affiliation for public record per WS 16-4-403B. And decorum will be governed by the rules and standards of Management Council Policy 18-03 and Wyoming Statute 16-4-406.
Thank you, Director. I'll begin in the room here, Stephanie. I don't have, my computer has no battery left, so if you can alert us if there's anybody that wants to address us for public comment. Is there anyone in the room here? Is there anyone in the room? Seeing none, is there anyone online? Thank you. It's been recorded that there's nobody online. So with that, Commission, thank you for your work today. Is there anything more that you would like to say?
Yeah, I guess, Mr. Chairman, we're gonna work in our office and see if there's any use cases that we have in our office that might be appropriate for the stable token, and work with your office and other commissioners to see what we need. If we identify something, see what we need to perhaps move forward on.
Thank you. I guess in your capacity as Commissioner and Treasurer, Good work. Further comment? If there is none, I would entertain a motion to adjourn. It's been moved. Is there a second? It's been seconded by Commissioner Wallace. I was a little worried we'd fail for lack of a second. So, in any event, thank you. All in favor signify by saying aye.
Aye,
Aye.
We are adjourned. Thank you all for joining us.
thank you.